Hey guys, Adam Black, your lender for your life. Are you looking at building your dream home and just don't really know where to get started, or have begin to look on the internet and it's all confusing? Well, hey, we're going to offer some clarity. This is, I think, the fourth or fifth video in this series of construction lending, and I've got a guy that I work with on a daily basis, Brian Nesbitt. How's it going?
Yeah, man, it's great. Thanks for having me.
Brian is our head of construction at the bank, and he handles construction lending on residential homes. And on the back end, I would do the permanent mortgage for you, which we'll talk about in some of these videos. Brian, thanks so much for being here. I want to get into the draw process today. This is one that's very confusing to a lot of people. When you mention draw, their eyes just kind of glaze over. They have no idea what's going on. So let's talk about that. Briefly explain the draw process of a construction mortgage.
Absolutely. So when you take out a construction loan, you're taking out a loan for, say, let's just say $300,000.
Okay.
And over the course of that project, you're going to draw down on that loan as the project advances. Okay. So if you take a house from the beginning and you start with a foundation and you go up from there, obviously, a foundation is not 100% complete house. That may be a 15% complete house.
Okay.
So as the house progresses, you will progress on advancing draws on your construction loan. So think of it as kind of an upward curve in terms of you start with call it a zero balance on your loan that you've taken out or funds that you've drawn down. And as the project progresses, the builder is going to ask you to draw funds to pay the builder for their progress. And so your actual principal balance will grow over time, whereas a mortgage, you take out the full amount at once. On a construction loan, that principal balance ramps up over time with progress.
So in other words, going back to that $300,000, if I have a $300,000 construction loan on day one, I don't owe you $300,000.
Absolutely not. You only owe, and construction loans, by the way, are typically set up as a 12-month interest-only payment.
I was going to ask that.
So as you ramp up your loan and start off on day one at zero, you're going to have zero payment.
Okay.
As you progress and draw $30,000, $60,000, $100,000, your monthly payment will be based on the amount of your principal balance at that current month at that interest rate.
So I'm assuming, and I know the answer to this,
Yes.
but just explain, you got raw land, you're going to do your dirt work.
That's right.
And you're going to do your foundation. So in other words, I'm not going to pay my finish carpenter right now.
That's right. Absolutely not.
So I'm assuming that you've got some type of a schedule that kind of goes from the dirt to the finished product.
Absolutely. We have an entire progress report that we go by based on what we call percentage complete. And in just a common sense, a certain stage of a house represents what percentage completion that house is at.
Okay.
Is it 15% complete, 25, 50, 75? And so every time a builder comes to you as a client, because consumer construction loans are taken out in the name of the consumer in most cases.
Right.
Builders typically don't fund those themselves. So as the builder comes to you as the client and says, hey, Mr. Client, I need you to draw down $30,000 so I can pay my subs for the foundation work and the framing and whatever it may be, we're going to go out and we're going to lay our eyes on the property to protect not only the bank, but to protect you as the borrower, to make sure that you're not being asked to draw down more funds than the stage of the house is currently at in terms of completion. Okay. It helps protect everybody. It's a good check and balance.
Well, that's what I was, yeah. And so I'm assuming too that just through the years with the hundreds of construction loans we've done, maybe thousands, we've kind of figured out what percentage of that total cost that the foundation is going to be, what the rough plumbing is going to be. And we're probably comparing that to a builder's bid and going, hey, your guy's getting a little bit out of range here. I mean, is that kind of a checks and balances?
Yeah, that's exactly right. And what banks will also do in a lot of cases is they will also hire a third-party inspection service just to kind of help make sure that everything is right where it needs to be. So we're laying our eyes on it as the bank, as the lender. We're utilizing a third-party inspector just to make sure that everything is what we would call trued up, and just make sure that everything checks out. I think that 99.9% of the builders that I work with very closely day to day are excellent. They're people of integrity. They do great work, but it's always good to have that check and balance just to make sure that, hey, is the amount being asked for in line with where the house currently sits in terms of completion?
All right, go back to you mentioned interest only earlier, and a lot of people don't understand that. Briefly explain, I've borrowed $40,000 October the 1st. I've got to pay an interest only payment. The next month I've borrowed $60,000. Explain that a little bit, just real briefly.
Yeah, it kind of goes back to that upward curve if you think of it on like a chart. But as that balance increases every month, you're being charged, and you'll get a monthly statement from a bank, and that monthly statement will show what is your current principal balance. So if you've got that $300,000 loan, but your current principal balance is only $50,000, you're only going to be charged an interest-only payment based on that $50,000 that you've actually drawn or withdrawn from your actual loan amount. And what we do is, to keep things very simple, is when you, and most every bank will do this, when you do a construction loan, you're going to open a construction checking account. Oh. And so when you call me and say, hey, I need to draw down $50,000 for my builder's progress to date, we're going to immediately fund that. After the inspection verifies it. We're going to fund that into your checking account. And it will vary from project to project. Some builders will send you one invoice and you'll just pay the builder directly. Some builders want you to actually cut the checks to the individual subs. Okay. But regardless, the money is going to be funded into your construction checking account. We verified that amount is trued up to where the house progress is. And then from there, you will disperse your payments to the builder or the subcontractors.
How often should they expect to make those draws? Is that weekly? Is it monthly? Does it vary?
It very well could be. On a lot of projects, the builder is going to have subs that get paid weekly. Okay. Because these are small businesses. Yeah. These are folks that have their own overhead and payroll and materials. They have suppliers. So let's say you're a sheetrock installer. That sheetrock installer, they've got labor that they have to pay that feed their families. They've got to pay the supplier for the sheetrock and the sheetrock mud, but everything else that goes along with that. So a lot of those folks are going to need, weekly payments in order to keep their businesses running, in addition to the builder's business as well. So a lot of those could be weekly. Sometimes it could be bi-weekly or monthly, just depending on the setup and the scope. But it's very common to see weekly draw requests.
During that draw process, kind of talking about the construction deal or the construction loan overall, what happens if you go over the loan term? You said earlier that I think in one of the other videos that it's usually a 12-month term. What happens, man, we get a bunch of bad weather and all of a sudden we're sitting there looking, we're 12 months down, we're 11 months down the road, we're 75% finished. What happens? Absolutely.
Well, the good news is the bank doesn't want to own real estate. We want to see you be able to finish your dream house. Yeah. And so we're going to work with you. And the very simple answer is a loan can be renewed. Okay. In most cases, it won't be for a full year. Okay. It will likely be for 3 months or 6 months, just depending on kind of, we'll check in and touch base. As we start to get into 9 and 10 months in the project, we're going to be talking about where we are in the progress. Do we think we're going to meet the completion date? And if we think we're going to miss the mark, we'll start talking about options for renewal. Okay. That is another loan closing because you're renewing a loan. Okay. But that's a good conversation to have. But we're going to be working well in advance with the builder and the borrower to look at all that and discuss that. That way there's no surprises.
It's not going to sneak up on us.
No,
we're going to know months ahead that
absolutely.
That's
coming. Okay.
That's right. Okay, good deal. Hey, man, I appreciate you talking about the draw process. Hope this gives you guys some clarity. This is a complete series of the construction process. Go back and watch these. You'll see a video to click on at the end of this. As always, like and subscribe. We definitely want you to subscribe so that you get notifications once we drop these. Share these with your friends. I know you know somebody out there that's wanting to build their dream home. Share this with them and comment. Let us know what you want to know so that we can continue to build these and add value to your life. As always, I'm Adam Black, your lender for your life. And if I can help you with anything, let me know.